everyone. My name is Dale Wetzel. I'm the host of the Legislature Today radio show. We're broadcasting live from the Peacock Alley American Bar and Grill in downtown Bismarck on State of the Union night. And we have with us this evening on our sponsored hour for Union Association, the Credit Union Association of the Dakotas. We're going to be discussing affordable housing and the North Dakota Housing Finance Agency, what it does. And we have as our guests this evening, we have Scott Bullinger. He's the mortgage sales manager for Capital Credit Union of Bismarck. We have Mike Anderson, who is the director of the North Dakota Housing Finance Agency. We have Mr. Scott Lauser, who's a Republican state House member from Minot, and he is a realtor. And we'll all be discussing housing issues. First of all, let's have a quick little check of what happened in the legislature today. First of all, in the North Dakota House, the sales tax exemption for clothing was defeated. The vote was 63 to 25 against. Another bill that would exempt clothing from the sales tax is awaiting a vote in the North Dakota Senate. It's sponsored by Senator George B. Sinner, who is the son of the former Democratic governor. This exemption would save consumers about $40 million over 2 years. Its promoters say that it would provide help to any North Dakotan who buys clothes, especially people who have lower incomes, because they pay more as a percentage of their income in sales tax than do people who have more money. The House also rejected a proposed 2-year tuition freeze for North Dakota's 11 colleges and universities in its public system. This bill was sponsored by a group of young legislators from Fargo and Grand Forks. The primary sponsor was a former student president at the University of North Dakota and a freshman Democratic state legislator. Her name is Kylie Overson. She's a new member of the North Dakota House. She said that when she went to college, during her college career, her tuition went up by $1,000 in that time alone. And she says tuition increases over the last decade have been inexcusable. However, the legislature decided, or the North Dakota House decided, that a tuition freeze would not be the best idea. That proposal lost 60 to 29. There was also a rather interesting budget presentation from Mr. Steve Cochran, who is managing director of Moody's Analytics, which is a which is a national forecasting firm that the state uses to try to predict what type of tax collections are going to show up in the Treasury over the next 2 years. Mr. Cochran said North Dakota leads the nation in pretty much every economic development metric, and the state is expected to have healthy growth over the next 2 years, but the rate of growth is going to be slowing, and he expects that the rest of the nation will catch up with North Dakota by 2015 in terms of economic growth and job creation. In the meantime, let's get to our program. We're sponsored again by the Credit Union Association of the Dakotas, and we'll start with Mr. Mike Anderson, the director of the North Dakota Housing Finance Agency. Mr. Anderson, could you tell us, what does the Housing Finance Agency do?
Thanks, Dale. We're an agency that provides affordable housing finance programs for North Dakotans. Probably the premier program over the tradition of the agency has been our first-time homebuyer financing, where we provide low-interest, safe financing for young families and people buying a home for the first time. We also do a lot of compliance monitoring for a lot of affordable rental housing projects in the state. We do compliance monitoring to make sure that those projects comply. And of course, most recently we've been doing a lot of financing or funding to encourage the development of more affordable rental housing across the state.
And what have you been doing to further that goal, to develop affordable rental housing?
Well, first of all, we've got a federal program. It's called the Federal Tax Credit Program, in which we provide equity to incentivize the development of multifamily. And most recently, a couple years ago, the legislature authorized the state to do something similar with the state tax credit, and that's called the Housing Incentive Fund. And again, we provide equity to the developer, is provided they'll build the property and restrict the rents and incomes for a number of the units in the project.
Why can't the free market provide affordable housing in North Dakota? What is the reason for your agencies? Why does your agency need to exist in order to accomplish that goal?
Well, it's to build an apartment building. The materials, the labor, the land costs, they're the same whether you're a target to market or you're going to target to low-income households. So what you need to do is you need to incentivize that builder to provide some units in their projects for lower income households. It's a free market system. The profitability on market rate housing is a driving force. So you have to provide them an incentive to do that.
And what sort of incentives do you provide?
We put equity. We make soft second mortgages. We give them funding to help pay for the cost of building that project, and so that their debt service can be lower, and as such their operating costs are low enough so that they can afford to charge less rents.
Mr. Lauser, you're in the real estate business in Minot. Can you just tell us a bit about your experience with the Housing Finance Agency and how it promotes home ownership?
Sure. Thanks, Dale. I guess my experience has been primarily with the first-time homebuyer program. And something that Mike had said that I think is very interesting is not only are these low-interest loans, but they're safe. And over the last 10 years, we've seen some volatility in the market with the national, FHA and Fannie Freddie type products. And over the time that I've been in real estate, I've had a number of buyers use these loans. We have some extremely educated, highly qualified mortgage lenders in town that understand the program, and when you bring a buyer in to talk to a lender about getting financing, they're able to describe this as a safe product. And I guess I'd have to go back, and I can't recall in our company ever having anybody default on one of these mortgages. The people that are borrowing are getting a safe product, and they're qualified. They're not on the fringe, but it's a product that provides a safe avenue for them for their first home.
Could you please tell me, what is a safe product? You've used that term. What does that mean?
Well, there's some flexibility in some of the financing, and of course some of those loopholes have closed recently, but this is not an interest-only loan. It's not adjustable rate. It's fixed rate. It's 30 years. Their debt-to-income ratios are very strict. They don't move outside the box, so to speak. And so if you qualify, you know that you qualify by income, and as long as you maintain your job and your income, you're going to be able to stay in that product safely. When I say an unsafe product, those are undocumented loans, interest-only, adjustable rate mortgages that weren't real common in North Dakota in the first place. They were part of the problem that we saw across the country. But these products that North Dakota Housing Finance Agency offers, and it's not just the mortgage. There's down payment assistance and that sort of thing that they offer that other programs don't. So I hope that describes what you're asking.
I guess one of the things that I'm curious about is that we have, as you know, very low mortgage interest rates now, and we have had for some time. As I recall, one of the original reasons for the first-time homebuyers program in particular is that it gave you mortgage rates that were below market, and sometimes the difference was significant. Now we have low interest rates for mortgage loans, and we have had for some time. So what is the advantage of having a first-time homebuyer loan?
Well, I guess in my opinion, this is going to sound a little bit odd that if you have an 800 credit score and 20% down, you may not qualify for the secondary market currently with a lot of the provisions that we have, quite honestly, under Dodd-Frank. There is about 400 rules that have yet, some of those have not been promulgated yet. The qualified mortgage and qualified residential mortgage, to me, are very difficult programs to try to get around in the future. you may need to have 10% down to buy a home, and in this case, 3.5% or potentially even less, 3.5% of your own money, which would include closing costs, allow for somebody that qualifies financially to get into this program. I have a lot of concerns with what's going on in the secondary market on the federal level.
And how does being in the first-time homebuyer market alleviate those concerns?
Well, those are held in North Dakota, the Bank of North Dakota, so they're not sold off on the secondary market and subject to those same restrictions.
Mr. Bullinger, Mr. Scott Bullinger, we're going to talk to you for a moment, sir. You're the mortgage sales manager for Capital Credit Union of Bismarck, and I understand that you were recently recognized as an affordable housing champion by the North Dakota Housing Finance Agency. Could you tell us how you came by that honor?
First of all, thanks for having me here this evening. We were one of 5 lenders that were chosen to accept this award this year. Mike and his team were grateful enough to choose us. We closed approximately 50 first-time homebuyer loans for the year of 2012. And I don't know what Mike's criteria all was, but I think that puts us up there, and we were very honored to receive the award this year.
And how is the first-time homebuyer loan program? How is it to work with?
Actually, it's very easy. As a lender, they've got strict criteria, but the more you do, the more you learn. The ease is very easy. Like I said, we did about 50 of them this year, and we enjoy them. They've got great underwriters. The training is there if we need it, which allows us to just grab these loans, get them done, and make people happy.
What do you need to do to qualify for a first-time homebuyer loan?
Well, typically, with their programs, they do offer a start loan, which basically allows you to get in with 0% down. It's a gift given from the state of North Dakota. And if we ask the sellers to pay their 3% towards closing cost, it really is an affordable deal to get into. Criteria-wise, they're looking at a good debt ratio, good credit scores. But being in North Dakota, I think the people of North Dakota are pretty reserved, so most of them do qualify for it.
When you say good credit scores, what does that mean? I mean, can you have kind of a little dodgy credit and qualify?
Well, typically they're going to look at anything a 640 or above to qualify for their programs.
Okay. Mike, you've been the Housing Finance Agency has been trying to develop housing in western North Dakota particularly. And could you talk about the challenges of doing that, given the fact that there's a housing shortage and the housing that's there is extremely expensive in a lot of locations?
Dale, and first of all, it's the problem we have out there is because of that shortage, the cost of housing is going up, and it's going up way beyond most traditional residents can afford, and so a lot of them are leaving western North Dakota, whether they're staying in the state or leaving the state also. The objective is there's a lot of housing being built in western North Dakota. We looked at building permits around the state completely, and the last 3 years there's been an average of over 6,000 housing units that have been permitted on an annual basis. But most of that, if not the majority of that, is market rate housing. Who's not being served out there are the traditional residents, whether that's the fixed income elderly, whether it's people employed on Main Street. They're providing essential services for those communities. They're housing challenged in terms of affordability, and that's why we've got the program. We're trying to build to that market to augment what's going on out there. We had a housing needs assessment that was completed last fall, and with that needs assessment, there was a projection of population growth, household formation growth. And it also talked about what the income or economic status of a lot of those households are projected to be. The study shows that right now, that over the next 2 or 3 years, is that we'll see about 7,800 new household formations in North Dakota on an annual basis. They're also projecting 55% of them. More than 4,000 of those are would be considered low-income households. And when you look at what we have been doing up to this point in time in terms of developing affordable housing units, is we're averaging just a little over 500 units a year is all that the programs, our traditional programs that we've had, that we've been able to accomplish. So we certainly are doing enough to serve that need in terms of traditional residents as well as those young, low-income households.
How do your incentives work in terms of providing affordable housing? I'd like you to try to explain that as to how it works, that you're involved in a deal and affordable housing results from that. How does that work?
Well, first of all, we solicit developers, in areas that we target to look at our program. We offer to provide, as I said earlier, equity. We'll provide up to 30% of the cost to construct the project. It's capped at $1 million. And if their project is otherwise eligible for us. In doing so, we ask them to income and rent restrict at least 30% of the units to the targeted market or households that they're looking for. So as they go about building that project, we're providing 30%. The rest of the money comes from traditional sources, whether that's a loan or other equity that they're putting into it. When the stipulation for us bringing that equity, besides the income and rent restrictions, is that they agree to hold those units affordable, for those income levels for at a minimum of 15 years. And we place a land use restrictive agreement as well as a lien on the property, and that's the basis in terms of which we can enforce that, make sure that they do comply with what they said that they were going to do.
So if I'm understanding you correctly, Mike, you help finance the project, and in return the developer agrees to rent some of the units at a below market rate.
Exactly, Dale. Yeah.
How do you determine what's affordable?
Well, affordability is a theory in terms of no household should pay more than 30% of their income towards their housing, and so you decide what income level of households you want to target. So if you want to target 80% of area median income, you determine what that is, and then you figure out what the affordable income is or rent should be, and then you try to structure a project around that in terms of the equity you bring and how much they have to borrow in terms of achieving that.
We're speaking this evening to Mr. Mike Anderson. He's the director of the North Dakota Housing Finance Agency. Representative Scott Lauser, he's a Republican from Minot and a realtor in Minot. We're also speaking to Scott Bullinger, who is the mortgage sales manager for Capital Credit Union of Bismarck. Mr. Bullinger, to what extent is Capital Credit Union involved in the sort of affordable housing projects that Mr. Anderson was just describing?
I would say that we're very involved. One thing that Capital Credit Union has done is we do homebuyer education classes twice a year, where we'll set up at a location and we'll bring people in and educate them on the programs that Mike does offer. We've also developed a Home Buying 101 book that we do offer for free to our members and to people looking to buy homes. So we do a lot of education.
How much, what percentage of your business as a credit union is home mortgages?
Well, last year we closed, our department closed 570 loans, which is a huge portion of Capital Credit Union's loan growth.
How does that rate you in terms of the Bismarck Mandan mortgage market, do you think?
I would say as a mortgage sales manager, we always want to be number one, but we're in the top 3 every year. So I think we do. Our team does a fairly good job at what we do.
And okay, I'm coming in and I want to buy a home from you. I want you to finance my home.
Sure.
What is it that you do for me?
Well, Dale, we'll sit down. We'll sit down and ask, I guess, what your needs are. At that point, so once we've established what you're looking for, we will sit down and do a free pre-qualification. At that time, we're going to ask you income, assets, your debts, Again, kind of what your goals are, what you're comfortable with as a house payment. And we sit through that. We kind of show you what you can afford, what it's going to cost you. We will sit down and do a good faith estimate for you, which breaks down payment, closing cost, everything that is situated with you purchasing a home.
How much do you require as a down payment?
Well, the nice thing about it, when we do use Mike's program, this North Dakota State Housing Finance Agency loans, we can get you in with 0% down.
And how does that work?
What we do is we do a conventional 3% down, but the state does offer what's called a start gift, and that is 3% of your loan amount that is borrowed, so that will actually offset the down payment request or requirement.
Is that, how much of an attraction is that for customers of your credit union?
It's actually very attractive. You know, a lot of people going into the first-time homes do not have that down payment requirement, and this has been a great program for us that allows our members to actually, again, get into a home with the affordable cost that it does take.
We've been speaking this evening with Scott Bullinger. He's the mortgage sales manager for Capital Credit Union of Bismarck. He's the gentleman whose voice you just heard. We also have been talking to Mr. Mike Anderson, the director of the North Dakota Housing Finance Agency, which is part of the North Dakota Industrial Commission, which is the governor, the attorney general, and the agriculture commissioner of North Dakota. We've also been speaking to Mr. Scott Lauser. He is a state house member for Minot, and a Republican and a real estate broker and agent and realtor. And we'll be speaking in the second half hour as well about affordable housing and programs of the North Dakota Housing Finance Agency. The agency recently held a housing conference in North Dakota and recognized a number of lenders as champions of affordable housing in North Dakota, and we'll be talking about that subject in our next half hour. Thank you, gentlemen, and we'll talk to you after our break. This is Dale Wetzel. I'm the host of the Legislature Today radio show. We're broadcasting live from the Peacock Alley Bar and Grill in downtown Bismarck. This is our sponsored hour of the show. Our sponsor is the Credit Union Association of the Dakotas, and we're talking about affordable housing and housing programs tonight. On the telephone, we have Mr. Spencer Hoover. He's a vice president at the Town and Country Credit Union in Minot. Good evening, Mr. Hoover. I understand that you're quite familiar with a flood recovery program that's been popular up in Minot called the Home Rebuilder Loan Program. It was run by the Bank of North Dakota. And could you tell us how that helped the community recover after the Mouse River flooding 2 years ago?
Well, it's about 203 members, about $6 million worth of loans that help our members stay in their homes and then keep them in the Minot region. I think a lot of those people didn't have the whereabouts to pay for those improvements that they needed to get back into the flooded homes, and it went a long ways into helping getting that taken care of. The program was awesome. The staff was great to work with at PND. Eric Hartmeyer and Bob Duman, really put a good program together, and it was very smooth, went very well. We're not completely funded yet, but most everybody has participated to some degree in the program.
Could you describe what the terms of the program are, sir?
What they do is you had up to a year to enroll in the program, and then you have up to another year to use the funds in the program. It's up to $30,000 they will give you to either rebuild your home or to buy another home in the Minot region to try to keep people in the Minot flooded region, Burlington, and down the river to Belva in that area.
And what sort of interest rate would you have to pay on that loan, sir?
2%. It was the going rate on the loan.
And how simple was it to administer? How if I'm a person coming in off the street and I want one of these loans, how long does it take me to get one?
Within days. You have to bring in the information that you were affected by the flood. Bring in all the documentation of the bills that you may have incurred in rebuilding your home, and then we take care of it from there. You bring in the bills, what it costs you to build a home. We send it in to Bank of North Dakota. They fund the dollars and then do the loan for you. So very simple, really user-friendly. Our members absolutely loved it. it'd be great to see. I think they have about $10 million left that could be used, and I really think there's a need for that, just because there's a lot of people I don't know that are completely rebuilt their homes and didn't know if they needed the funds at the time, and may now believe that they need those funds. So it'd be nice to see the program continue at least for another year.
What's your sense of what the demand would be for the program, sir, if it were continued for another year? How much loan volume do you think it could generate?
Well, I believe they would send out the other $10 million very easily if they let it go for another year. I believe, because there's a lot of people, again, I said that, this was a very devastating flood, and I think it took a lot longer to get back to where they might have thought they would have been, even in a shorter time frame. So I really believe that if they kept it out for another year, it'd do a great benefit for the Minot region, Burlington, and the Delaware region.
Sir, what sort of marketing does your credit union and other institutions in the area do to make folks aware that this program exists?
You know what? We really haven't done a lot. DMD did do a little bit during the middle, but the program was so widely recommended by people in the flooded area. We just had a really good turnabout. I know, talking to some other financials in the area, they all did about the same number of loans. And so, again, you can see the program was pretty successful. I think they started out with $50 million. They lent out about 40. I think they have about 10 left, if I'm not mistaken, or thereabouts. So you can see that it was a true success. Bank of North Dakota is to be commended, along with the legislature, for allowing them to do that. But it'd be nice to use all the funds and make sure that they get out to the counties that need them.
Mr. Hoover, do you think that there's enough demand still extant to go above $10 million?
There may be, because, again, I think about 75% of just the Minot region had been rebuilt. That leaves another 25%. And then, the up and down the stream as well, there's a little bit more. So, you see there's still 900 people living in FEMA homes. So I do think there's probably still some need out there. As much dollar amount, I'm not really sure. But I would say it would be at least $10 million, if not a little bit more.
We're speaking with Spencer Hoover. He's a vice president at the Town and Country Credit Union of Minot. Mr. Hoover, could you just describe for us your assessment of the state of flood recovery in Minot right now?
We've been doing extremely well. Burlington has a lot to be proud of. Burlington has a lot to be proud of. They're really, within the short time frame that we're 75% rebuilt, and you lost 4,000 homes in the flood area. It's been phenomenal. With all the support from the churches to help people get back on track again. Very proud to say I live in North Dakota, and very, very proud to say I live in Minot, North Dakota, for what we've done and how far we've come in such a short period of time.
Mr. Hoover, we also have as guests on our program Mr. Scott Lauser. He's a Minot state representative, a Republican, and a realtor. We also have Mr. Mike Anderson, the director of the North Dakota Housing Finance Agency, and Mr. Scott Bullinger, the mortgage sales manager for Capital Credit Union of Bismarck. Mr. Lauser, Representative Lauser, how would you describe the state of flood recovery in Minot presently?
Well, it's difficult to really put words to the pictures that you see or the experience that you have. And what Spencer described was an amazing effort by people to say, I'm gonna take care of myself. I'm gonna recover from this. But the overall flood protection plan for the region is well over $800 million, and there's not federal funds available to that level. So there are a number of things left to do. We're talking about the home rebuilders loan. There are three bills. There are three bills introduced in the House and the Senate. One was to extend that program. Spencer's right. There's about $10 million left. The people living in the FEMA units are now being charged rent, and so the Senate bill would extend that program 1 year and allow for the funds to be used to buy those FEMA trailers. Another bill that I had in the House that passed, and then the one I mentioned in the Senate passed unanimous. The one I had in the House allowed that same program to be extended to non-owner occupied. Landlords didn't have access to money the way single-family or primary residents did. And there was a third bill that, as far as I'm concerned, was the toughest vote I've had to, or the toughest speech I've had to give, was last Thursday. And what I tried to do is paint the picture for the legislature what actually happened in the flood to property owners. That bill was Representative Dan Ruby of Minot. was asking to forgive 1/3 of the loan if you were current on your loan for 5 years. That bill did not pass the House, and so 2 of the 3 bills referencing the extension of the Rebuilders Program have passed so far. They're going to cross over, and I expect favorable treatment in both chambers.
Do you think that there is demand for money beyond the $10 million that's available?
Yeah, I do, and I talked to a property owner a couple weeks ago in Minot that has 3 properties that are sitting vacant and stripped down to the studs. He doesn't have the money to do anything to rebuild those properties. And he's a landlord, so he didn't have access to the money in some of the programs. This would also extend to commercial properties, so I think absolutely. But I also think this was authorized in the special session. $50 million was an estimate. $50 million was pretty close. How do you know how much money you need to recover from a flood 5 months after the flood? So the 50, I think, was appropriate. I wouldn't have introduced the bill if I didn't think there was a need to at least go up to the $50 million. I think that we're going to prove that there is need for extending.
So if this program, the Rebuilders Loan Program, was available to commercial property owners and to landlords, how much demand do you think that there would be from those sectors of the market?
Well, you'd asked how is that going to get out? How are people going to know essentially 2 years after the flood that there's a program available? I don't think there's going to be a lot of marketing of that program because I think it's still appropriate. There were a lot of people that didn't get in on the deadline that would have qualified. It was September of 2012 to apply. And there were people that didn't get in for whatever reason, justifiable reasons that they weren't able to apply for the loan. I would hope that those primary resident owners are the first ones to apply on the extension. So I think that there would be enough demand to use up the full amount if it were just landlords.
Mr. Mike Anderson, you're the director of the North Dakota Housing Finance Agency. What has the agency done to help to promote flood recovery in Minot and the whole Souris River Valley?
Okay. First of all, you're probably aware that the state established a task force for flood recovery, and our agency led the subcommittee for housing recovery. And so we've been up in Minot. We've consulted with the city. We've consulted with FEMA and everybody in terms of how do we go about flood recovery from the housing perspective. And as I sit here, those conversations continue to go on because, as you've heard, flood recovery has not been completed up there, and so we're continuing that effort. In terms of a couple of our programs, in terms of multifamily development, the federal tax credit program as well as the housing incentive fund, we've put some priority to Minot on those programs. Last year, hoping that we'd get some rebuilding, some new replacement housing for apartments that were damaged and likely would not be replaced. And we're still hoping to see some of that. And this year, when the housing incentive fund gets reapproved, we're going to take a serious look at whether or not we need to continue some priority to Minot. There's a huge shortage of affordable rental housing in Minot. We were seeing that because of the oil was impacting Minot before the flood, and so much of what got destroyed in terms of housing was affordable housing, whether it was single family or multifamily. And so they've got a double whammy in terms of those families, and so we need to do a lot more to get some more affordable rental units up there.
So the flood in Minot did affect a lot of the affordable housing stock?
Exactly. I mean, it was a traditional neighborhoods that was the focal point of where most of the flooding took place, and even a lot of single-family homes. I think Scott would agree that they were rental properties, and they were affordable rental properties. So some of those have been put back into service, but I think a lot of them haven't at this point.
Mr. Bullinger, was there any demand for the Home Rebuilder Loan Program in Bismarck?
There was, and our department specifically did not handle that, but I know on our retail side, I can't speak to dollar volumes, but I know that there was a need for it, and once the floods went through Bismarck-Mandan.
To what extent did do you think that do you think that folks haven't applied for a rebuilder's loan that maybe could have, as apparently is the situation up in Minot?
I'm sure there are some individuals yet, and I don't know if we're still seeing people come through. But I know North Bismarck along the river, Hogue Island area. I think there's still some homes still that need to be refurbished.
Mr. Anderson, I wanted to talk a bit about the housing finance or the housing conference that just concluded.
Sure.
What sort of issues were raised at the conference that you think are particularly important in promoting housing in North Dakota?
Well, it's every year when we start planning the agenda for that conference, we get our stakeholders together, the lending community, the building community, community planners, and talk about what's the most important topics to talk about this year. And most of the stuff we talked about today this year was doing training for property management, updates on fair housing and issues that landlords and tenant issues that they go through today. There's you've heard a lot about the mortgage lending business, about how the federal regulations is really making it difficult to be a mortgage lender. So we brought some people in from on a national basis and talked about mortgage forecasting, telling us what they see is going to happen there. And so again, it's we do some traditional training on our programs, updates on our agency programs alongside of that. So we touched on a lot of things.
Mr. Hoover, could you please tell us a bit about what new regulations from the federal government have done in order to how they have changed how you can make mortgage loans, and if they've made it more complicated to do that?
Wow, where do I start? Between just disclosures and then good faith estimates, appraisals, the time that it takes for an appraisal, and then the appraisals are so much more complicated than they were in the past, and how the appraisals are ordered. I think there's 60 new regs coming this year alone that will have effects on changes on how we do our paperwork, but then how our members get their paperwork, and then how much paperwork we have to get to each of our members every time a loan closes, and how quick you have to have an appraisal to your members before it closes, and all the documentation you have to have. It starts at the very beginning with the application, and then the days it takes from those applications up to 13 days before you can close a loan, where it used to be 3 days. Good faith, you could actually close a loan within 3 days in a home equity loan. Now the quickest you can close a loan is about 13 days. So it's just the timeline and all the regs that they've done over the last 2 or 3 years has really made it difficult to keep the process smooth and to get our members in a home or get them a home equity loan within a short period of time.
Mr. Hoover, one of the rationales, I presume, of these regulations is that they protect consumers in some way. Do you think that purpose is accomplished?
Yeah, I do in some aspects. It does help people maybe read the documentation more and making sure that they're not jumping in too quickly and that they have more time to think about the process. But it puts a burden back with fees and how you calculate fees, and it puts it back on the credit union as far as if a fee is charged by a title company or an appraisal, that it comes in higher. It doesn't go back against the member, which is good. Unfortunately, it comes back against the financial institution or the credit union, and then again you start eating fees, and it starts costing a little bit more money. But yeah, I think some of the programs do help. The educational side of it, I think, is the most important part. Is that we just need to educate the people who are buying homes, and so that they're making good decisions and that they're not buying too much home, because that's what happened in the past. They no income, no assets. We didn't have to look at bringing them their assets, and now we're doing and scrutinizing that a little bit more. So it is really helping, making sure that when somebody does get in a home, that they have the financial whereabouts to be in that home for a long period of time.
Mr. Lauser, as a person who sells homes, what sort of differences have you noticed in terms of people's ability to buy homes, to close the deal, to get financing as a result of the new federal regulations that have been mentioned?
Well, Dale, I think you just hit on something inadvertently, and it's the ability to pay, the ability to repay. Last year I served as vice president for the National Association of Realtors, and one of my roles was to meet with the heads of the major banks' mortgage departments, the mortgage divisions, and I also testified at Congress on the qualified mortgage rule within Dodd-Frank. It was a great experience, but it was a real eye-opening experience. As in meeting with Chase Bank in particular, oddly enough, they told us that they have an 8-page application. Page 8 of the application says intentionally left blank. If that is not signed by the applicant, there's a threat of a buyback under a rule that has yet to be promulgated within Dodd-Frank. Meaning, if somebody is 30 days late on their loan 7 years in advance, there's a threat that the lender may have to, the originator of that mortgage may have to buy that loan back, which is making it extremely difficult for people to get financing. Not to mention the appraisal timing and that sort of thing, but the burdensome paperwork that lenders are having to go through. Congress has not yet ruled if this is what they call a safe harbor or a rebuttable presumption, meaning they don't have a definition of what a good loan is outside of having to go to litigation and buying that loan back. This is something that most people don't understand when they go in to apply for a loan. I have enough money down, I have good credit, why is it so difficult to get financing on the secondary market? These are all, in my opinion, overreactions to a housing bubble. And a housing bubble is not a national thing, but an underwriting bubble from 8 years ago. It is exceedingly difficult to get financing even as a well-qualified buyer.
Mr. Bullinger, what have you noticed in terms of the increased amount of federal regulations as to how it affects how you can do your business, how you can close mortgage loans with your customers?
Well, what we've run into is it has been now a 60, 90-day process. The 30-day quick closes that we were used to do prior to all these issues are no longer such. So it has slowed down the ability to get into house as quickly as we used to. One thing too, as a lender, we have to slow down to make sure that all of our documents are in place. It's been an extra work for our auditing committees, our auditing departments.
I mean, do you have to hire extra folks to deal with the paperwork?
Yes, we have. It's the days of having more loan officers, less processors are kind of flip-flopped. It's more processing, backroom audit than loan officers.
How does this affect the customers? I mean, do the customers get a lot more questions, or they ask for more information than they were before?
They are, and just like Representative Lauer had said, your 800 credit score guys are scrutinized more than they ever have. And they're the savvy buyers, and they don't understand why we're needing all these extra documents. Yeah,
I was going to ask about this particular thing with our guests. If someone has an 800 credit score, which as I understand it is like about as good as you can get, what is the problem with getting a home mortgage?
I'll give you one specific. This is even more than the 825 or 800 credit score and a good down payment and a good debt-to-income ratio. You may have investment properties on the secondary market with 5, 10, 15 years worth of good history and a return on the investment. But FHA, up until recently, would only allow for 4 secondary market properties. So if you were a savvy real estate investor and you had a down payment, a good credit, you were the best risk that could be taken. Fannie would not allow that to be sold on the they wouldn't buy it on the secondary market. You'd have to go find alternative financing, usually in-house financing at a bank, which the terms change dramatically, or I shouldn't say just a bank, but any lender. It makes it real difficult for somebody that has put themselves in a position financially to get that type of financing and should be able to get it based on federal regulations that they somehow don't qualify.
Mr. Hoover, do you care to comment about this subject?
I agree with everything that was just said by everybody there. We're all, I think, all on the same page. It does slow it down because of the documentation. We have a lot of good people that should qualify for a home that they say they're trying to protect, and they're actually holding them up and causing some people not to get the home of their dreams or be able to be put in the home of their dreams. Homes that I would have done 10 years ago in a heartbeat, I'm not allowed to do now. And they're good loans, and they're strong people, and they deserve to have a home, and they're not allowed to buy a home because of new programs. So yeah, we have some work to do. I hope Congress goes back to it and makes some adjustments so that we can get back to doing good business like we did back in the 90s.
Sir, how much expense does this add to the customer?
Actually, it doesn't add anything to the customer. We've been eating it internally. It's costing us more money to do the same amount of business. Like Scott said, you know, I have a lot more processors and underwriters that work for me that I did in the past to try to close the same amount of loans.
We've been speaking to Mr. Spencer Hoover. He's Vice President of Town and Country Credit Union in Minot. And he's been on the phone with us this hour. And we also have been talking to Mike Anderson, Director of the North Dakota Housing Finance Agency, and Mr. Scott Lauser. He's a state representative from Minot, a Republican, and a realtor and home salesman in Minot. We also have been talking to Mr. Scott Bullinger, the mortgage sales manager for Capital Credit Union in Bismarck, and we've been talking about affordable housing and regulations and all sorts of good stuff. And our segment has been sponsored by the Credit Union Association of the Dakotas, which represents credit unions in North and South Dakota. Thank you, gentlemen.